Hey guys, hope you're all doing really well. Look, I just wanted to do a quick breakdown of what's happened on gold so far. Unfortunately, there hasn't really been any opportunities, well, no A plus setups that I've seen so far, but I will run through what I have seen so far and potentially what may happen. I can't predict the market, but I'll just give you my thoughts on that anyway. But before I do that, I just want to quickly run through the ICC strategy for those that are new. If you are familiar with this strategy, please feel free to skip this section, and we can then you can skip to the area when we're actually talking about what's happened so far. But for those that are new, tune in now. So ICC stands for Indication, Correction, and Continuation. It's a trend-based strategy. This means that the market either needs to be in an uptrend, like this example on the left, or a downtrend, like this example here. Now, when we're drawing our charts or when we're looking for the uptrend or the downtrend, we want to be looking at the higher time frame. So focusing on the 4-hour time frame and the 1-hour time frame. That's really, really important. Probably the most important part, or one of the most important parts. So for an example, for an uptrend, we want price to be creating higher highs and higher lows. So in this example, we can see there's a low, creating a high, creating a higher low. It's a higher low because it's higher than the previous low. After the higher low is created, it creates a higher high. This is our first phase, the indication phase. As soon as price creates this higher high, we can then draw our level of interest at this previous high here. And that's the first phase played out. Second phase is the correction phase. So that's when price breaks below the level of interest and below that high. It doesn't break the previous higher low, and it creates another higher low. So at this point in time, again, guys, this is the focusing on the 4-hour and the 1-hour time frame. So we've seen this formation on that higher time frame, the 4-hour and the 1-hour. Once we've then created that correction, we're looking to scale down to the 15-minute and 5-minute time frames to find characteristics that support the overall trend. And the overall trend is upwards in this instance. It's an uptrend. So we're scaling down 5-minute and 15-minute time frame, and we're looking for characteristics that support the trend. So we're looking for higher highs and higher lows on those smaller time frames. Once we can see that clearly and then price starts breaking above this level of interest, we can then look to take an entry, and we want to overall target the higher high. My preferences at this point in time, and has been for a little while, is that I like to take profits at the halfway point, and I also like to take profits at that higher level. So that's as simple as it is, guys. Then we obviously have the reverse, which is the downtrend. So that's when price is creating lower lows and lower highs. So we've got a high. I'll run just through this quickly. We've got a high, a low, creating then a lower high. It then creates a lower low. Now this is the first phase, like the uptrend. This is the indication phase. We can then draw our level of interest on the at this previous level here, at this previous low. So indication phase is done. Now after that lower low is created, we want price to correct. So this is the second phase playing out. We want price to come back above our level of interest, not breaking the previous lower high. At this point in time, we scale down to the 5-minute and the 15-minute time frame to support the overall trend, and that's the downtrend in this example. So we're looking for lower lows and lower highs on that 15-minute and 5-minute time frame. Once we see that and we can see price then breaking below the level of interest, we can look to take entry for the continuation phase. So we're looking to take ultimate targets at this lower low, and I preferably like to take profits at the halfway point as well, just so that I can take some risk off the table, because price doesn't always come back to these lows. Sometimes it does go halfway and then actually it reverses. So it's nice to take, especially if you're learning or you're still becoming familiar with the strategy. I would highly recommend taking some of the profits off at the halfway point, just so that you're getting familiar with the strategy and you're feeling a little bit more confident. It does take a little while to get used to it. I'm still familiarizing myself with it, even though I've been doing it since around July. But I've seen some really great success with it so far. So it's something I'm going to stick with long term, because it's really simple to understand. And if the opportunity's not presenting itself clearly, then it's a trade that I don't really want to be in. And that's the most important aspect of trading. You only want to take trades that make sense. So on gold, we can see, wow, for the last, since 19th of November in particular, it's really just been consolidating for the longest time. And only since really Monday and Tuesday, we did create that indication. Now this is the 4-hour time frame. So always start on the 4-hour time frame and then scale down from there and see what you can actually see. If you can see the ICC strategy playing out, then look to take the trade. So we can see very clearly, if we're looking here, I'll just draw this out so it makes a little bit more sense. We can see that there's a low in the market, there's a high, price then creates a higher low to then create a higher high. Price then doesn't come back below this level at all, and creates another higher low to then create another higher high. Now, ideally, you want your level of interest to be at this point. So as soon as we've created that higher high, I'll just show you here. So once we've got the low, the higher low, and the higher high, that's the indication phase. Level of interest goes on that previous level, that previous high there. But we can see that it actually doesn't get to that level at all. So what you could have potentially done, and this isn't it's not an absolute textbook trade, but we know this is based on what Sai says all the time. We know that once price breaks above a level, we know that the price has the potential to be bullish. And it has the potential to be bullish because it's created that first phase, which is the indication phase. Once it then creates the correction phase, we know that back above this level, because the bulls were strong here, we know that once price gets back above our level of interest, that price has the potential to be bullish again. And it's a little bit messy on this one in particular. So I think we need to sort of scale in to the 60-minute time frame just to see what's happening. Yeah, look, and we can see that on the 1-hour time frame, price really just consolidates for quite a while here. So it's not really even an ideal setup in all honesty, guys. It's something I probably would have avoided. And also I didn't even see this play out until the next day, because I trade the London session. So at the time I would have been looking at this chart was around here. And look, there's not really an opportunity here. The risk to reward is too great. It's about a 1-to-1 risk to reward. So if we look here, I would have had to put my stops at this low here and target overall here. And even on the let's have a look at the 15-minute time frame to see if that's any better. It's not really. It's not a clean trade. You can see that the risk to reward is terrible here. So in all honesty, guys, actually absolutely no trade there. I wouldn't have touched this. Yeah, it just didn't make sense. So if we're to then look further ahead and see if there's potentially any other opportunity that might come our way, you can see on the 4-hour time frame, price is just consolidating. It has moved, it gapped above here very cleanly, but since yesterday, it's just consolidated in this range for the longest time. Today, it's consolidated. I would say that potentially, and I'm not sure of this, but once price does consolidate for a long time, it's building up pressure, and it generally likes to break out. So whether that's to continue to the upside, I would say that's very likely, because price is very bullish at this point in time. And look, the most obvious level where price would want to sell from would be up at this level here. So we've got probably a lot of buying potential, and these buyers they want to offload their contracts or their orders to all these sellers up here. So they're going to probably drive price up here to then sell out or get out of all their positions up here. So we'll see what happens. But at the moment, guys, this week has just really not been really good there's not really many good opportunities at all. So it's best to really sit on your hands and just let the market come to you. That's one of the most important pieces of advice I can give you. You don't want to force trades, because as soon as you force trades, that's where you lose so much money. I've done it before. I've forced trades. I've lost plenty of money in the past, and it's just not a good feeling. So the best thing you can do is just be patient. But that's pretty much it, guys. If there's anything more interesting that does transpire on gold in particular, I will run through that. I haven't run through NASDAQ, but I might do that in another video. If you did want that, just do let me know in the comments section. I'll happily run through that, but I'm sort of just focusing on gold at this point in time. But I'll leave it there, guys. Look, if you did like the video, please do give it a thumbs up. If you want to see more content like this, please do hit the subscribe button. I'd be very appreciative. But anyway, I'll see you guys in the next one, and have a great night.